Hey everyone, me Kevin here. Could a Biden victory on November 3rd crash the housing and stock market? Fair warning, I am not taking sides in this video. I'm simply going to review what I know about a potential Trump second term versus a Biden first term. Quick note, the coupons below for the amazing courses on real estate investing, stock investing, the psychology of money, and of course, making YouTube videos from home does expire September 29th. First, Biden's economic plan. Let's talk about that. Biden's economic plan would potentially include all of the following, and we'll probably see all of the following if Democrats end up sweeping the presidency, House, and Senate. If they get all three, we might see a lot of these. Here's the list. $15 minimum wage, universal pre-kindergarten, higher capital gains taxes, a financial transactions tax. This is maybe more of a Harris proposal. We'll see if Biden ends up taking it. But a financial transactions tax would basically be a tax of around $6 per $3,000 of stocks that you buy or sell. So you sell $3,000 of stocks, you get like a $6 commission that you have to pay. FTT, financial transactions tax. Increasing the corporate tax rate from 21% to 28%, more tax credits for those with lower incomes, more affordable housing, raising the estate tax, increasing payroll taxes on those making more than about $137,700 per year, potentially eliminating the stepped-up tax basis, which is basically a way of reducing generational wealth, or taxing it at least, and potentially eliminating the real estate 1031 tax-deferred exchange, the like-kind exchange. Wow, those are a lot of changes, but let's do a little bit of research to see how we think this is actually going to impact us in the short term. Just a quick note as well, today's video is sponsored by life insurance you can get in as little as 5 minutes via the link down below. And remember, you can get one free stock with Webull when you deposit just $100. On an income basis, the Wall Street Journal believes if you make $50,000 per year and you're married with one child, you would save around $2,900 in taxes under a Biden plan. If you make $80,000 per year, you'd pay about the same in taxes under a Biden plan. And if you make more than $100,000, you'll likely see an increase in taxes that you pay. Specifically, as an example, if you make $1 million per year, you would pay around $32,000 more per year in taxes. Overall, the Tax Foundation, a different analyst group, says that Biden will make everybody's incomes go down slightly. The Tax Foundation thinks that 94% of people will see their incomes go down about 0.5%. And that's mostly due to the overall economic drag that we sometimes see when there are more taxes. But hey, if you made $50,000, about a 0.5% decrease in your income would be about $250. The Tax Foundation also suggests that if you are in the top 6%, your income could go down anywhere between 1.5% to 8%, depending on how much money you actually bring in. Okay, so we've got some implications here money-wise as far as what we could expect. It seems like if you make $50,000 or less, Biden's tax plan might actually help you save some money. As soon as you start making around $80,000, you start breaking even, and as soon as you make more than $100,000, you start paying more taxes, and that number just goes up and up and up the more money you make. Kind of like a progressive tax system after all. Either way, there is a lot of change that's possible. However, most of this change won't happen unless either Democrats or Republicans win both chambers of Congress along with the presidency. And so in fairness, I'll quickly mention the alternate, and then we'll get into how this is actually going to affect the market. So the alternate would be Republicans sweeping the House, the Senate, and the presidency. And this is, of course, possible, though some say a complete Republican sweep like what we saw in 2016 is not very likely. It could definitely happen. We have no idea. A lot of us have our own opinions on poll numbers, and we all will definitely have our answer. Well, I guess hopefully we'll have our answer by November 3rd. So I'm not going to spend much time on a potential Republican sweep, but we do know that Donald Trump's priorities are to lower the corporate tax from 21% to 15%, even lower for corporations. And we do know that Trump has mentioned he'd be open to more tax cuts for everybody. So this really gives us a contrast between Biden and Trump. But since the title of this video has to do with Biden, let's focus on what might happen if Biden and the Democrats sweep. That is, Biden wins, Democrats get the Senate, and Democrats get the House. I won't talk more about Donald Trump because mostly if Donald Trump wins or they sweep, we'll either see slightly lower taxes or things will just stay the same. So we'll call that the status quo, and we won't spend too much time here. Let's talk about the potential big change, and that's Democrats and Biden. Research papers by two senior economists, one at the U.S. Congress Joint Committee on Taxation and one at the Urban Brookings Tax Policy Center, gave us their opinions via CNBC. In the months prior to the Reagan capital gains tax hike, which, let's just pause for a moment and mention, Biden has suggested increasing the capital gains tax as well, so just want to give you that reminder. In the months before Reagan jumped his capital gains taxes, or the country's capital gains taxes, from 20% to 28% in 1987, the sale of stocks and other assets surged 60%. In other words, people sold a ton of stuff right before the tax increase, which makes sense because they're like, oh, I've made money. Do I want to pay 20% now or 28% later when I sell it? Well, let's just sell now. So they saw a massive increase in the amount of people selling stocks and selling assets. And now remember, today we face the potential of capital gains taxes going up as well. Kamala Harris even suggested having no capital gains tax rate. Basically, if you have capital gains, maybe they should just be treated as ordinary income. Biden's mentioned, maybe we'll only treat them as ordinary income, which would be a higher tax rate, if you make more than a certain amount of money. And some of these things are still to be determined. We don't have the exact details yet. From Biden, we have mostly an outline of some of his priorities. And increasing the capital gains tax is one of those priorities. So if Biden wins and sweeps the House and the Senate, yeah, it's possible we could see the same similar increase in people dumping stocks and dumping real estate. But how's that going to actually affect the economy? Well, before we talk about that, let's talk about one more example. In 2012, the capital gains tax rate went from 15% to 23.8%. So you can see this has kind of been a volatile history, right? Because Reagan pushed it to 28%, but then in 2012, it went from 15% to 23.8%. Anyway, right before that happened in 2012, sales of assets jumped 40% in the months right before the new capital gains rate went into effect. Now, the economists found that in the short run, yes, a lot of people sold assets, stocks, and real estate, and basically rebalanced right before the new tax rates came into effect. With the Biden plan, economists believe we might see a 45 to 50% increase in the amount of people selling stuff. But here's the interesting thing. What happened to the market during those times? Well, even as sales surged, that is, the amount of people dumping stuff surged, the market didn't crash in either of those two prior examples. In fact, in the turn of 1986 to 1987, right when that new tax rate went into effect, the market still kept marching on for another year and a half before we got to the 88 recession, which was largely seen distant enough not to have been affected by this tax rate change. Simply put, even though people dumped a bunch of stocks and there was more volatility and people ended up rebalancing, they kind of just went right back into some other stocks. And so when we had this transition to a higher capital gains tax rate in the late 80s, nothing really happened until the recession a year and a half to 2 years later of 88 to 89. So that's something interesting to keep in mind. It's like, wait a minute, so people sold more stuff. Why didn't that crash the market? Is that just an anomaly? And again, it was far enough away from the 88-89 recession for there to be any correlation between this tax increase and the higher selling, because that higher selling all happened in the months prior to the tax increase, late 86 and early 87. No impact at all to the market falling. Okay, that's really odd and actually was really unexpected when I read that. So then I went to the next example. And apparently, in late 2012 and early 2013, we were coming out of the recession. Real estate prices bottomed in about the end of 2011. And I personally remember being a real estate agent during this time. At the end of 2012, all of a sudden, people were buying more real estate. And the beginning of 2013, real estate prices were shooting up. But at the same time, we also saw the capital gains rate in 2012 go from 15% to 23.8%. And sales jumped 40% in stocks and real estate and just assets in general. But that's weird. So we saw a ton of dumping in 86 to 87. We saw a ton of dumping in 2012 to kind of avoid these potential tax implications, yet the market kept marching on. despite the fact that we saw a spike in taxes, we actually didn't really see any kind of downward pressure on actual market prices, which honestly to me sounds totally like the opposite of what I expect. Like when I hear taxes are going up, I'm thinking to myself, people are gonna dump, people are gonna sell, and it's gonna force prices down. So I wanted to see, why would the economists think that if we see a Biden administration and taxes go up, that we won't see the market crash? Why won't the market crash? Well, here's what they had to say. Well, the economists ended up doing some more research and found that less than 25% of all the corporate stocks that exist right now are owned by individual people like you and me. Instead, most are owned by retirement accounts, pension funds, institutions, foreign investors, and entities. And they don't really care about the capital gains tax rate. In fact, these funds also don't necessarily care much about the corporate tax rate. And part of that is because what other alternatives do pension funds, institutions, retirement accounts, foreign investors, and other entities have to invest in? In other words, these economists draw a really big bottom line. They say, here's the thing. It's not necessarily what taxes are on people or corporations that are going to crash the market. Yeah, we're going to see a spike in sales. We'll see more volatility before a tax rate change, or, in theory, possibly before the election. But the overall direction of the market doesn't change because of these minor sort of ups and downs. So in other words, in 1987, the market was still hot and moving along and chugging along great. And the market kept doing that despite new taxes. In 2012 to 2013, the market was just getting ready to have its real estate run up. And that kept happening despite the tax increase. And so the economists believe that even if Biden increases taxes and Democrats sweep, we'll probably just see the market stay on the same path that it's been on, unless of course something else happens. So in other words, if we're in a position right now where we have low interest rates for potentially the next 4 or 5 years or even 10 years, then investment companies and us as individuals might not have many alternative options. It's kind of like, what do you want to invest in? This high yield savings account that gives you 1%? Or do you want to just invest in stocks? Yeah, tax rates might be a little bit higher, but what other choice you got? You got stocks and you got real estate, and that's it. It's the overall direction of the market, in other words, that has a much bigger impact on market prices than taxation. However, is it possible that the market could crash because of a second wave of COVID combined with a jump in inflation and the Federal Reserve all of a sudden increasing interest rates way before expected, and all of a sudden that compounding with an eviction crisis? Yeah, that could probably crash the economy. But at least according to these economists, crashing the economy because of taxation, not very likely. It's probably not going to change the overall direction of how the economy is moving. I thought this was very interesting. I'd like to know if you agree or disagree with these economists. Let me know what you think in the comments down below. Get your life insurance in as little as 5 minutes. Get your free stock with Webull. Check out those programs in the links down below. And folks, we'll see you next time.